Hello, everyone. Good morning from this part of the world. It's morning here, 9:42 p.m., 42 a.m. local time, and 8:42 a.m. UTC. And depending on whichever part of the world you are tuning in from, good afternoon and good evening to you. Well, it's another beautiful day, and in fact, I'm very, very excited to welcome you to our midweek review session of our Forex Morning Mastery as we prepare to get ready for the second half of the week, which also promises to be another exciting one. So far this week, we've been doing pretty well across the asset we've been monitoring since the beginning of the week, which includes the USOILSPOT, which has escalated in price in recent time after we were part of the bearish bandwagon. And then we also have the GBPUSD on our watch list, which is also doing pretty well in the last couple of days. And finally, my favorite asset amongst them, which is the XAUUSD, popularly known as the gold spot, which is one of the most profitable assets on our watch list for this week, as price hit another new record high in the last 48 hours. So today we are going to be diving into the charts, viewing things from both sentimental and fundamental perspective with the utmost intent of unraveling the potential direction of price action today and of course for the later part of the week. Today we are going to be reviewing the fundamental factors. We are going to be looking at the positive drivers. We are going to be looking at the negative drivers for each of these assets as well. We are going to be identifying potential entry zones and of course see how we can maximize our existing position, while we also mark out areas where we shall be moving our stop losses to secure the current positions we are currently holding at this point in time. So if this resonates with what you're looking for, I encourage you to stay tuned in so that you do not miss out on any of the valuable ideas we will be deliberating on today. And for those of you who are joining us for the first time, you are highly welcome on board. I'm very, very excited to have you around with us. And I do know it is reasonable for you to begin to wonder what this is all about. Well, to simply put, the Forex Morning Mastery is an idea that was born out of the necessity for me to do live follow-up details on the assets I usually monitor week in, week out. So we do this 3 times in a week: Mondays, Wednesdays, and of course Fridays, where we come together to have a deep understanding into how market participants are behaving with the utmost intent of using this information to strategically position ourselves for the next move. And it's important for me to also emphasize that this is not a signal service platform, but instead an educational avenue where we come together to understand what is going on in the market, discuss the market together. If you have questions, you can throw them in, and let's enlighten ourselves as we also try to learn along the way. So I'm excited to welcome you once again and encourage you to actively engage in the comment section. And if you have any questions, you need some further clarification as regards to the financial market or any of the asset we are monitoring for this week, feel free to drop them in the comment section. And do not forget to give that video a thumbs up. Your likes are valuable to me, and in fact it also goes a long way in helping this community to grow. And thank you very much as you do so. So with that being said, here we will be diving right into the business. And as always, the first thing we normally do is to keep tabs with the fundamental factors that will be influencing the sentiment in the market today. And for those of you who have been with me for a while now, checking on the economic calendar allows us to pinpoint potential correlations between key economic releases and specific technical patterns on the chart, hereby giving us valuable information and, most importantly, timing to position ourselves in such a way that we can capitalize on any potential move prior, during, and even after this economic event. Now, based on the assets we're monitoring for this week, we have been focusing on high impactful event from both the United States and the United Kingdom economic docket. However, the first half of the week has been very scarce of major economic events, though we had some high impactful event on Monday, but Tuesday there are no high impactful events. So today too as well, I don't think there is any high impactful event, so we will be including mid-year economic features so that we can have a broader view into what majority in the market are looking forward to. Now, before we go into what is happening today and what we're expecting today, let's run through the economic features that has influenced the sentiment in the market this week immensely. Now, at the beginning of the week, we had S&P global publications from both the United States and the United Kingdom economic docket. And for those of you who are not familiar with the S&P Global, we actually talked about this on Monday, but for a refreshing purposes, this is an index that offers us key insight into the health and performance of the service and manufacturing sector of both the United States and the United Kingdom. And this report takes into account business activities, new orders, employment levels, which can directly influence how market participants will behave in response to the outcome of this data. Now, this index is usually between 0 to 100, where anything below 50 is considered to be a contraction in that sector, while anything above 50 is considered to be an expansion, which obviously will influence the sentiment around the currency asset of that economy positively. Now, from the data we saw here from the United Kingdom, all the data, both the composites, the manufacturing and services PMI came in below what market had expected, giving a dampening effect to the market. However, though we saw a sharp reaction as a result of that data, bringing the pound sterling down a little bit before the S&P global publication from the United States also came in, where we saw the composite PMI coming lower than market had expected. We saw the manufacturing PMI from the United States also coming lower than market had expected. Remember, the manufacturing sector hasn't been doing very well in the last couple of months. And finally, the service PMI came in higher than market expected. In fact, the service sector has been doing quite well in the last 3 to 4 months, and as a result of this, market were still of the opinion that the Fed may likely cut interest rates a little bit more in their next interest rate decision meeting. And as a result of this, we saw how the pound sterling took advantage of a weaker US dollar to ride another wave of momentum to the upside. So we are going to be looking at that in a moment. And of course, we also had some couple of speeches from the Fed officials. We had Goolsbee, we had Kashkari, and of course, yesterday we also had Bowman speak to as well. However, from all of what they have said so far, what I could come up with is the fact that they all acknowledge that inflation is easing in the United States. Now, where they vary in perspective has to do with the magnitude of the interest rate cut. Some of them are saying they will want to vote for another 50 basis point cut, and some are saying they will be voting for another 25 basis point cut. So this is where the dynamic is shifting, bringing in some uncertainty into what is likely going to happen in the next couple of months as regards to the interest rate decisions. Now, yesterday we also saw the housing price index, which is another significant data, and we all know how the housing sector is considered to be a sensitive aspect of the US economy. The housing sector data index came in below what market had expected, in fact even lower than the previous month data at 0.1%, giving us a deficit of 0.18. So for us, This is not too good, a report from the United States as well, which could further dampen the value of the US dollar. So as a result of this, we are going into today's session with the hopes of looking forward to some couple of events today, which though is not considered to be an high impactful one, but it will go a long way in helping market participants decide what next they are going to be doing. Now today we have the Bank of England's vice deputy governor's speech, which already had happened. I'm yet to have an highlight into that, but I will definitely give us update as the event goes by during the course of the later part of the week. Then we also have a speech coming in from Kogla. She is a voting member of the FOMC. And of course, whatever she says today is likely going to be influencing the sentiment in the market, as market participants will be looking forward to her speech to have an insight into the economic outlook, potential interest rate possibilities going forward, and of course, our opinion as regards to the magnitude of interest, the potential interest rate cut coming up in the next meeting. So the time for this is 8 p.m. UTC, that is 9 p.m. Local time, that is West African time. So I encourage us all to mark out this timing. So this is the only event that I think will have some influence on the market today. And tomorrow we will be looking forward to some other events. We have the high impactful event from the United States. That's the gross domestic product annualized for quarter 2, which is usually expressed in annual growth rate, and it measures the total value of goods and services produced by the US economy. And this indicator here is considered to be a significant one, as market participants will look forward to see how well the US economy had performed in the last quarter in comparison to the previous quarter, which will go a long way in bringing some fresh impetus into the market. Now, based on what is on ground right now, market participants and economists are projecting that the economy would have grown by at the 3% expansion, just like the previous quarter. So we look forward to see what the actual data will be. And of course, let me say this here, the anticipation of the GDP data could influence some extended sideways trading activity in the market, as major key players may step aside waiting for this data to come in before making any aggressive bet at this point in time. So if we see consolidation phases in the next 24-36 hours, we shouldn't be surprised. And in fact, if we have any position running, we do want to be moving our stop losses accordingly, secure them just in case this kind of situation happens today. So these are the events we're looking forward to, and of course we also have a bunch of Fed official speeches tomorrow as well from Bowman, and most importantly we look forward to the Fed chairman's speech too as well tomorrow. Coming up tomorrow, we have Barr, we have Cook, we have Kashkari. All of them will be speaking tomorrow, so I encourage us all to have the timing of this event. And one thing I do usually say here is that the anticipation of this event, and based on inside report that major key players do have prior to this event, usually reflect on the charts as price action. So prior to the event, major key players will start positioning themselves in anticipation of the outcome, and this usually brings in structural patterns that we as retail traders usually look forward to help us strategically position ourselves for the next move. And that is exactly what we are going to be doing in the next minute. So with that being said here, let's dive right into the business for today. And while my chart is loading up, I see you, Esther Idinmachi. Good morning to you. Glad to have you around with us today. Jonah Haruna, how are you doing? Good morning to you too as well. So while I try to load up my USOILSPOT chart, it usually takes a while for this chart to load up, but let's hope that it loads faster than expected. So let's see. I think I'll have to open another one so that we look out for the one that loads up first. Okay. I wonder why my USOILSPOT chart usually take a long time for it to load up. So while we do so, kindly give the video a thumbs up. We have over 7 people on board right now. I would really appreciate you to let's make the number of likes tally with the number of people on board. So we only have 2 likes. It doesn't cost anything. Kindly click on that thumbs up button, and thank you very much as you do so while we wait for the USOILSPOT chart to load up. All right, so here we go. So here we go now. We have the USOILSPOT on the chart, and we have quite an interesting situation gradually unfold at this moment. I have a buy position triggered, which is in line with what we discussed here yesterday, and we will be talking about that in a moment. But before we go into the technical details, it's appropriate of us to understand the fundamental factors behind the scenes. Let's weigh the positive one and the negative one, and let's see how the market participants are digesting this information to help us navigate this current market dynamic. Now, recently we saw the Chinese government introduce its large stimulus package since the pandemic, and this has lifted sentiment in favor of the oil market. We all know China is the largest importer of crude oil in the world, and if the economy is doing well, if the economy is buoyant, if the economy has some level of positivity, it usually influences the demand in the oil market. Now, as a result of this stimulus package that was announced yesterday, we may likely see some positive traction, though it's not yet reflected in the market in real time. But bullish traders will want to use this as a sentiment to start opening more positions on their crude oil market. So this is one information we want to hold on to, which obviously supports an uptrend scenario for the USOILSPOT. Now, the other factors here that could also influence the sentiment in favor of the USOILSPOT is the geopolitical tensions going on in the Middle East, and of course the Russian-Ukraine war. Now, the conflict, especially the Israel attack on Hezbollah in Lebanon, raises concerns about potential supply disruption, which further could boost oil prices. And then we also have the API report, that is the American Petroleum Institute report, which came out yesterday, and we had a larger than expected drawdown in US crude oil inventory in the United States, and the data came in at 4.339 million barrels decline compared to the forecasted and expected number of 1.1 million. So you would agree with me that's a very huge variance we are talking about here. Now, for those of us who are new with me, well, you may be asking, what is the idea behind the drawdown or increase in stockpile in the API or EIA report? Well, when there is a drawdown in stockpile, what this simply means is that the demand in the market was so high that they had to go back into the stockpile to go back to their reserve to bring in oil to pump into the market. Now, what this simply means is that they had to take more from the stockpile to be able to replenish the demand in the market. Now, our simple economics tells us that when there is high demand, what happens? Price will definitely rise. Now, with the report we saw here yesterday showing us that there is a huge drawdown in stockpile, this could likely influence the US crude oil prices to the upside. Now, with all of these data that I'm having here, the path of least resistance for US oil still remains very bullish. However, we cannot ignore the potentials that sellers could also come into play. So we will be looking forward to the Federal Reserve Governor, Andriana Kugler, which I did talk about earlier, who is going to be giving a speech today and may provide insight into the broader economic conditions which could affect the oil demand at this point in time. But with the way things are going right now, the path of least resistance for US oil remains bullish. Now, with this understanding in mind, let's go into the chart and let's look at things from a technical standpoint, which could reveal how market participants have digested this information in order to help us to move forward. Now, looking at the chart right here, you will see that since the beginning of the week, the market has been a little bit choppy, confined within a range-bound structure in the last 48 to 60 hours to emphasize the prevailing uncertainty in this particular market. Now, for those of you who are with me on Monday, remember we had a range-bound structure identified initially where price was confined within the $71.65 level and the $70.85 area to emphasize the prevailing uncertainty at that particular point in time. And usually whenever we identify a range-bound structure like this, we exercise patience waiting for a decision to be made, which will reflect on the chart as either a breakout of the resistance line to give us an opportunity to buy, or the breakdown of the support line to give us an opportunity to sell. Mind you, we had price breakout of the resistance line. We had a buy stop order triggered, but unfortunately that buy position did not do very well as we got stopped out in a loss on that particular position. However, price action went on to break down the $70.85 level with a huge engulfing bearish candle, as you will see here. But I actually missed out on this opportunity. Remember, I said here on Monday that we will only sell if price action break down and retest the structure before we can start considering selling, which obviously never happened. Now, yesterday morning, while I was dropping my commentary like I usually do on a daily basis, I began to notice that sellers are finding it difficult to continue the downtrend move. And one of the major signs I saw here was this sharp rejection of the $69.50 level, giving us a candle that looks like a hammer candle. And theoretically, a hammer candle tells us that buyers are still present in this particular market. Now, as a result of this observation, I decided that I will be looking out for buying opportunity if price action climbs back above our key level at the $70.50 area. Remember how we use our key level, of course. When price remains below the key level, we look out for selling ideas, but if price breaks above the key level, we begin to look out for patterns and structures that support the idea of buying. Now, with this in mind, if you saw my update yesterday morning, I did say that we will be looking at buying above the $70.85 level, and then we also had multiple levels. Remember, at the beginning of the week, we had this level here at the $71.15 level, which we identified on the 15 minutes time frame. I did mention here that we will be adding more positions there, and of course add another one at the breakout of the $71.65 level. So the last 24-36 hours saw us capitalize on that bullish momentum that hits the $72.40 level before that choppy market condition began yesterday, I think a couple of hours into the New York session. And I do hope you moved your stop losses accordingly. If you had done so, you must have been taken out with a modest size of profit on this particular one. And for everyone who did capitalize on this opportunity, well done and kudos to you. Now, moving on into today's session, I've already identified a new structure which I'm going to be using to navigate this market dynamics today. And what I actually did here was to take into account the character of price action in the last 4, 5 days since Thursday. I think that's about 4 or 5 days are there, so 3-4 days thereabout. And what I noticed was the consistency in the lower highs, resulting in this bearish trend line you see here after connecting the series of lower highs. Now, what happened here yesterday was quite interesting. We saw price break out of that descending trend line for the first time in 4 days to signal that sellers may have lost the momentum, as the inability of that trend line to negate the bullish attempt for me is a very good signal that we might continue, or this level might be a platform for new highs. And theoretically speaking, whenever we see price break out of a key structure like this, we expect that some point in time price will come back, retest the structure in an attempt to continue the uptrend move, which is what has been going on here in the last 12 hours. So as a result of this, I had a buy position triggered, had a $71.50 level, a level which beautifully shares a confluence with that descending trend line. And of course, I will be looking out for more opportunities to buy at the breakout of the $71.65 level. Now, for those of us who did capitalize on this opportunity at the $71.15 level, well done to you. I will be advising you right now to move your stop losses. Let's secure this position at a worst case scenario break even while we continue to monitor price action going forward. So based on the fundamental factors we talked about earlier and the structural details we identify on the chart, which obviously reveals to us the sentiment in the market and how market participants have digested this information, I strongly believe that the path of least resistance for the US All Spot still remains to the upside. So I keep a bullish bias in that regard. And of course, I will be looking forward to adding more buy position if price action breaks out of the highest point price action has been for this week, which is exactly at the $72.20 level. So I would like to mark this level out too as well, and I encourage us also to do the same, as a breakout retest of the structure will definitely be welcoming another wave of bullish momentum. And look at how beautifully that $72 area shares a confluence with that resistant line of the descending channel we identified on the higher time frames. You can see a beautiful. Let me share with you on the 4 hours time frame what things are looking like so that we can be on the same page. So that's the descending trend line we're talking about here. Remember, we were looking at a descending channel on the higher time frame, as you will see here. So this is the 4 hours time frame, and we are looking forward to see if the market will break out of that resistant line to continue the uptrend. However, if price gets into the structure and we continue to see selling pressure, that is, buyers are finding it difficult to break through, this could incite selling opportunities that could bring price back into the support line of that descending channel. So at that point in time, as soon as price gets into the resistant line, we will be moving our stop losses, secure some buy position while we monitor how market will react to that structure. So if we see a double top structure or any form of reversal pattern there, a breakdown of the neckline will validate it and welcome selling ideas. But if price breaks out of the resistant line, then we want to be looking out for more buying opportunities around that zone. So you can see how beautifully that level shares a confluence with that resistant line. So the $72.20 level is another area we want to be looking out for more opportunities if price action ever gets into that point. So this is my simple view on the US All Spot today. I maintain a bullish bias, and I will be looking for selling opportunities only if a reversal pattern evolve around the $72.20 level, maybe a head and shoulder pattern, a double top structure, or a rising wedge, mark out the neckline and then sell the breakdown retest of the neckline. However, if price does not go that far instead and it continues to drop to the downside, is it reasonable for us to consider selling at this point? Well, for me, the only condition that will make me sell if I'm looking at things from a long-term perspective is for the key level at the $70.50 level to be broken to the downside. But if we see strong signals prior to the breakdown of that structure, we could join it. And how is that so? Well, I want to see something like price breaking down the structure, going below that descending trend line. I want to see continued selling pressure, showing me signs that buyers are finding it difficult to climb back above the trend line. Then I can start considering selling maybe below the $70.85 level and then add more sell position at the breakdown of the $70.50 area. So I doubt if this will happen today, well, but if it does, let's be on standby to capitalize on that opportunity. So this is my simple view on the US All Spot for today. I encourage us all to mark out these levels and structures on our chart, as we will be needing them as a reference point to guide our independent trading decisions today. So I will be taking the next 10-15 seconds off. Let's see if there are any questions, or if you have any clarification needed, feel free to drop them in the comment section, and do not forget to give the video a thumbs up. Thank you very much, guys, as I look forward to seeing you on the other side. Cheers. All right. So in the absence of no questions, I want to take that as a confirmation that we are all on the same page. With that being said, let's move on to the next asset on our watch list. And mind you, hope you've marked out these levels on your chart. These areas will be playing a significant role in helping us to navigate this current market dynamics today. So moving on to the next asset on our watch list. So the next asset we are looking at this morning is the GBPUSD, that is the British pounds against the US dollar. And of course, we've been taking out of all the buy positions we have been enjoying since the beginning of the week with some significant amount of profit. I think from yesterday's position, we had about 70-80 pips in total after this bearish momentum began. And at the beginning of the week as well, we were buying, remember, at the 1.37 area, which we duly identified during the course of the Forex Morning Mastery on Monday morning. Now, for the sake of clarity and for the sake of those who are not part of Monday's session, let's rewind back into the beginning of the week. Let's see what led to the decisions we made. So I will only be deliberating on the 1 hour time frame. So if you had missed out on our first day of the week session, that is on Monday, I would encourage us all to go back and have a look at how we did a top-down analysis on this asset. So I will only focus on our execution time frame, which is the 1 hour time frame. Now right here on the 1 hour time frame, remember the first thing we did observe was the fact that price was sitting above a robust ascending trend line, which obviously emphasized the strength of the buyers in this market. Now secondly, we had price sitting above our key level. Remember, our key level for this week is the 1.3700 area, and a quick reminder of how we use our key level. When price remains above the key level, we look out for patterns and structures that support the idea of buying, and if price drops below our key level, we want to be looking out for selling ideas. Now besides these two structures here, that is the ascending trend line and our key level, we saw that during the first 10 to 12 hours of the week, the market was confined within the 1.33235 level and the 1.33050 area to emphasize the prevailing uncertainty at that particular point in time. And you know how we treat our range bound structure whenever we identify them. We wait for price to either break out or break down of that structure to give us a signal of where price is likely going. However, we saw that price did break down the support line, and not only the support line of that range bound structure, it also broke down the ascending trend line, which later turned out to be a false breakdown. And in fact, this breakdown happened before our Forex Morning Mastery session on Monday, and I did mention during the live session the fact that price is back at our key level. Any form of buy pressure around this area should welcome buying opportunity. And one of the reasons why we affirm this is the tendency of this level having a memory for buying power. Remember, this level, this key level, at some point in time in the past was a strong selling niche, and not until last week Thursday we saw price break out of that structure. We saw it happen again on Friday as we saw buy pressure resume from that particular area, as sellers found it difficult to break through that structure. Now, due to this strong buying niche in the last 2-3 days, we decided that any form of buy pressure around this area will welcome buying opportunities, and as a result we saw price climb up, break out the structure, continued its momentum to the upside, broke out of the 1.33050 area. For those of you who saw my updates, this area was one of those levels we mentioned. We will be looking out for buying opportunity. We also added one more at the breakout of the 1.33235, and finally we saw another one at the breakout of the 1.33395. And during my commentary, I dropped a commentary yesterday morning, and in my commentary I emphasized that all buy position has been closed after moving our stop losses accordingly, and that we have a new structure that will be helping us navigate this market for yesterday's trading session. And this was this zone here. We had an indecisive phase which lasted for about 12 to 18 hours, where price was confined within the 1.33590 and 33400 area, just right above our ascending trend line. And due to this, we were of the opinion that the momentum could continue to the upside. So positioning ourselves above the 1.33590 area welcomed another buying opportunities for us yesterday, and of course we also marked out another level at the 1.33800 area to maximize the potential of that bullish move. and we saw how price climbed into a new high at the 1.34275. And of course, you know how we do it in this community. As soon as price moves significantly in our favor, we move all stop losses, secure some profit, and if you have done so, you must have been taken out of a modest size of profit. And once again, congratulations to everyone who stayed faithful with this analytical approach. Now, as it is right now, we've seen that in the last 1, 2, 3, 4, 5, 6 hours, the market has been gripped with bearish momentum, pushing price back into structure. In fact, we have a situation where price is trading somewhere around that ascending trend line and the 1.33800 area. Now, the question at this point in time is, will this momentum continue to the upside, or is it high time that market participants are considering doing some short-term profit-taking activities ahead of the Fed official speeches and of course the GDP data coming in from the United States tomorrow? Well, before we go into that technical details, let's run through what the drivers in this market is. I mean, what are the fundamental factors behind the scenes that is influencing the sentiment in this market? So we will be talking about the positive drivers, and we're also going to be talking about the negative driver. Now, first of all on the list is the expectation that the Bank of England will reduce interest rates more gradually than the US, than the Federal Reserve. Now, based on what is on ground right now, the Federal Reserve is keen on cutting interest rate even more. And if we look at the CME Federal tool as at this morning, markets are pricing in a 75% chance of a 50 basis point rate cut by the Federal Reserve in November, which continues to undermine the US dollar and of course strengthen the British pounds at this point in time. Now, due to this, we could see a depressed US dollar as aggressive policy is in expectation from the Federal Reserve may keep the US dollar near its lowest point for a long time, and this will continue to favor the upside trajectory of the GBPUSD. Now, yesterday or Monday, as regards to the PMI data, we saw a softer US economic data, which obviously continues to add pressure to the US dollar, reinforcing the bullish outlook in this particular market. And in fact, the overall market sentiment, or let me say the overall risk appetite, further weighs on the US dollar, boosting the GBP USD pair. Personally, if you would ask me, the path of least resistance still remains very bullish for the pound sterling. However, we cannot ignore the overbought conditions on the GBP USD chart at this point in time, and this could lead to the fear of missing out coming into play at this point, as those who had capitalized on the uptrend move that started about a couple of months ago may at some point want to start taking some profit, which could result in a retracement move to the downside, which may be may be a reflection of what we are seeing happening in the last couple of hours. So at this point in time, I believe that major key players might want to step aside from the market, waiting for let's say the US new home sales data we talked about earlier, which is expected later in the day, and this could create some short-term volatility in the GBP USD. And of course, we also have a bunch of federal official speeches coming up today and tomorrow. We talked about that earlier. And of course, we also have the US PCE report coming up on Thursday, and the GDP data also coming up tomorrow as well. So these are major events that could influence the sentiment around this market. Now, with the situation we have here, and considering the fact that the path of least resistance for the British pounds remain bullish, how do we intend to navigate this current market dynamics today? Well, looking at the structure that is our 1 hour time frame, let me zoom out so we can see things clearly. Price action still, things are still looking very bullish. Look at that beautifully as identified ascending trend line after capturing all the pivot lows. And in fact, if I extend this one to this one right here, we have another trend line that could guide our trading activities today. Now, if we zoom back into the structure, we could see a situation where price could break down the 1.33800 level into this ascending trend line, where the appearance of a reversal pattern, it could be a inverse head and shoulder pattern where the neckline could fall around the 1.33800 area to incite more buying opportunities around this area. So at this point, we are at a critical juncture where we will need to wait for follow through signals before we jump into either buying or selling this market. Now let's talk about the areas we want to look out for buying or selling opportunities. Now, first of all, we should understand that the market price action still above our ascending trend line, and as long as price remains above the ascending trend line, we will continue to look out for structures and patterns that support the idea of buying this asset. Now, as it is right now, where do we think we can buy the GBPUSD? Above the 1.33800 or above or at the retest of the 1.33590. Well, this is subject to how market participant reacts to this range. So for me, this area is going to be a center of focus between today and tomorrow. Depending on what happens within this range will determine how we will be navigating the structure. So I'm looking for possibilities like a reversal setup. It could come in the form of a double bottom structure where the 1.3380 will be the neckline to incite an uptrend scenario, or it could evolve into a let me call it a inverse head and shoulder pattern, something like this. Price comes back to test the trend line, and then we have something like this to incite an uptrend scenario. So I will definitely give us an update on how to manage this position going forward. However, if you are a swing trader or more of a positional trader who is looking at capturing the long-term perspective in this market, I still think that buying above the 1.338 around this point in time is looking reasonable. That is placing a buy stop order above this structure and ensure that you have a wide range of stop loss that will capture the volatility that could happen ahead of this event. So that means that you want to have your stop loss way below that ascending trend line, which could dovetail to between 25 to 30 pips of stop loss depending on where your entry point is. And of course, this will have captured all the formation that could happen as a result of a potential reversal pattern around this particular area. So I still think that the path of least resistance remain bullish, so I'm buying above the 1.33800 area at this point in time, and if price continues to climb to find new highs, then the breakout of the highest point for this week at the 1.34275 will welcome more buying opportunities for us. So let me say here we are looking for a reversal setup here. Let me just highlight it on the screen. You can screenshot it, keep it, and then use it as a yardstick to navigate the structure. So I will bolden this a little bit. So we are looking for a reversal pattern here. It could come in the form of a double bottom structure, inverse head and shoulder pattern, falling wedge, whichever case it may be. Mark out the neckline, then buy the breakout of the neckline. However, if you are someone who is a positional trader, so you can afford to have a wide range of stop loss, place your buy stop order above the 1.33800 area. Have your and put your stop loss way below the second ascending trend line, and then let's see how the market is going to play out. So this is my bullish idea as regards to the GBP USD. Now, in as much as we looking out for buying opportunities here, we cannot ignore the potentials that sellers could come in. We never can tell what the US new home sales data will say later today, and of course we don't know what the Fed officials will be saying in their speeches today and tomorrow. And of course we are looking forward to the US CPE price index and the GDP data. We don't know what the outcome of those data is going to be like. If it's going to favor the US dollar, we may likely see this ascending trend line breached and broken for the first time in the last couple of weeks. Now, if that is going to be the case, I will only look out for selling opportunities if this ascending trend line is breached and broken to the downside. Now we have the ascending trend line here, which beautifully shares a confluence with that 1.33590, which we have right here. So it's a beautiful confluence we have here. So if price breaks down the structure, we will start considering selling the GBPUSD. However, we're not jumping into a sell right away. We are not placing a sell stop order, but instead we want to look out for confirmations before jumping into that sell position. So what I'm simply saying here is price will break down the structure, both of the structure first of all, and then we want to see price retest the structure, giving us signs that buyers are finding it difficult to climb back above the ascending trend line. Then we can start considering selling the GBPUSD. So you can see how crucial this ascending trend line is for us today. So let's mark it out on our chart, as we will be needing it as a reference point to guide our independent trading decisions. So I hope I made myself very clear here. If you have any questions whatsoever, feel free to let me know in the comment section. So I will take the next 10-15 seconds off. Let's see if there are any questions whatsoever, and do not forget to give that video a thumbs up if you have found this content helpful and useful in making your independent trading decisions for today. Kindly support the channel by clicking on that like button. Thank you very much as you do so, and see you on the other side. All right. So in the absence of no questions, I want to take that as a confirmation that we are all on the same page, and I do hope you've marked out these levels accordingly. They will be it's going to be useful for us to navigate the structures today. So with that being said, let's move right into the final asset on our watch list for today. So the final asset on our watch list for today is my favorite amongst them, and that is the XAUUSD, popularly known as the gold spot. And what a tremendous week we have here on this particular asset, as we rode the momentum all the way from that breakout of the 2,616 all into the 2,670 area, which is the highest point price of gold has ever been since its existence. It has been a profitable week for all of us, and once again, congratulations to everyone who had stayed faithful to our analytical approach and capitalized on this opportunity. Now, for the sake of those who are joining us for the first time and educational purposes, let's rewind back to the beginning of the week and what led to the decisions that made us to buy the XAUUSD from a technical standpoint. Now, looking at the structure here at the beginning of the week, remember we had our key level at the 2,590, an area which was broken for the first time last week Friday, as you will see here. And for the fact that price was sitting above our key level, we were looking out for bullish ideas, buying opportunities. Now, as soon as the week began, now let me a quick reminder here, I will only be deliberating on the 1 hour time frame. I have a top-down analysis on the XAUUSD, which I shared during the weekend, so you can go ahead into my channel and look for my recent video on the XAUUSD to see how we were able to identify this key level, so you can have a deep understanding into how we got to this point you're seeing here. So back into the business. So as at the beginning of the week, we saw some interesting situation unfold. Though the week started on a strong bullish note, price started at around the 2,616. That was this area, and then we saw a barrier as soon as price tested another record high. That was at the beginning of the week. That was around the $2,631.50 level. Then we saw a massive decline back into where price started the week. Now, in the midst of this consolidation phase, that is when price was confined within the 2,631 and 2,616, we were able to identify an uptrend continuation pattern. Now, after taking into account the impulsive move that broke out of that key level, this one right here, we saw that price transition into a consolidation phase, which evolved into an uptrend continuation pattern, which is looking more like a pennant, or you may call it a flag pattern, depending on which perspective you are looking at it from. But the most important thing is that it was an uptrend continuation pattern, and usually whenever price breaks out of that structure, it validates the uptrend scenario. And of course, I told us on Monday that we want to see price come back, retest the structure to give us an opportunity to continue the uptrend move, and this was exactly what happened. Price came back, retest the structure that was broken around the 2,616, and this welcomed our first buy position for the week. And remember, we had multiple levels to maximize the potential of the bullish move. We had another level at the 2,626. You remember, we also had one more at the breakout of the $2,631.50 level, all of which helped us to capitalize on more opportunities. By the end of Monday's trading session, we were taking out of all our buy positions. As you all know, we moved our stop losses accordingly. And for those of you who are with me on both my TradingView and Telegram platform, you got an update that we will be moving all stop losses to secure the position. Now, on Tuesday, we had a new trading setup after observing the character of price action in the last 18 to 24 hours. And one thing we observed was this crucial 2,626 level, which since the beginning of the week had played a significant role in negating all attempt by the sellers to break through to that structure to the downside. And as a result of this resistance from buyers, which we can see reflected here, we decided to buy again above the 2,626, which ideally updated us on my Telegram platform. And I think I had a new trading setup prior to that. Let me see quickly. But on the 15 minutes time frame, isn't it? I think so. Yes. Hold on a sec. Okay, yes, this is it right here. This is it. This was my update yesterday morning, I guess. Yes, yesterday morning, this was my update, and I did identify a temporary demand zone around the 2,626, and I said we will be adding more at the breakout of the 2,635, and thank goodness we were able to ride that momentum all the way. My tippy target was around the 2,665, but price broke out of that structure to find an all-time record high again at a $2,670.50 level. So once again, everyone, congratulations for being part of this move. So with all positions closed following that TP target, I had another buy position triggered this morning, which I will be explaining to you in a moment. But before I go into that, let's quickly run through the drivers in this market. Let's understand what the market participants are banking on to make them feel comfortable buying more of these commodity. First of all on the list is the expectation of a more aggressive rate cut by the Federal Reserve, which is acting as a headwind for the US dollar and further providing support for the gold commodity. I've been talking about this week in, week out, even prior to the interest rate decision last week. Then secondly, we also have the geopolitical tensions in the Middle East, as the risk of further escalation of conflict between Israel and Hezbollah usually could fuel an increase in appeal for safe haven assets such as gold, copper, silvers, and the like. And this will further continue to push price to the upside as well. Then the political uncertainty in the US with the upcoming November presidential election, political instability usually boosts safe haven assets. So in election era, we usually see price of gold rise to the upside. So this is another factor for me that continue to support the ascent of gold prices. Now, the other factor, which is the final one on the list, is the weaker US macroeconomic data, like what we saw on Monday from the PMI data, where we saw a less than expected data from the PMI, except for this service sector, which did very well. And Tuesday's soft US data, that is the sharp drop in the Conference Board's Consumer Confidence Index and the Richmond Fed's decline in manufacturing activity, further hurt the US dollar and lift gold prices to record high. And then we should not ignore the Chinese current economic stimulus, which could also continue to support broader risk on mood, providing an indirect boost to gold commodity as well. Now, in as much as the path of least resistance remain bullish for the gold commodity, we cannot ignore the current risk on mood in the market, which could trigger some profit-taking activity, especially after price has hit a record high. Right now, price is within an uncharted territory. Price has never been in this area before, and this could incite some fear of missing out emotions in the market, resulting in unexpected profit-taking activities, which could result in choppy market conditions, retracement move, and even consolidation phases. So we need to be very, very careful that we could see a crash happen from this area significantly. Now, another thing we could also take into account is the slight recovery in the US dollar. We've been seeing some slight recovery lately, especially from the US Treasury bond yield, which is directly proportional in value to the US dollar. This could also influence the sentiment favoring the US dollar and indirectly incite some selling pressure on the gold commodity. So with all of this in mind, we are going to be looking forward to speeches from the Federal Reserve officials, which will be giving us some insight into the economic outlook of the United States and, of course, interest rate decisions going forward. And we have the US PCE price index coming up tomorrow. We also have the GDP data coming up later tomorrow too as well, which could provide some insight into the market. So as a result of this event, we could see price go through an extended sideways trading activity as key players in the market step aside, waiting for this data to come in before making another aggressive bet. So as a result of this, let's look at the chart and see how the market are likely going to behave, considering the technical details we have. Now, looking at the structure on the 1 hour time frame, the first thing I did here was to acknowledge a trend line, which has been a resistant line since last week Friday, as you will see. So after connecting the series of higher highs, I have a beautiful ascending trend line to work with. Now look at this trend line here. It has played a significant role in pushing price to the downside, though despite pushing price to the downside, it continued to find higher highs, showing no signs that buyers are getting stronger at this point. And then finally yesterday we saw price break out of that structure. So this is a key structure we are going to be using to navigate this market dynamic going forward. Now, theoretically speaking, when price breaks out of a key structure like this, we expect at some point in time price may come back, retest the structure in an attempt to continue the uptrend move. Now, with the situation in mind, with this idea in mind, you will see that in the last 3, 4, 5 hours, the market had continued to find buy pressure just right above that structure. Now, the question going into today's session is, will this area become a platform for new buying opportunities and of course push price to find new highs? Well, for me, at this point, I already placed a buy stop order. Sorry, I already played a buy. My buy stop order has been triggered already for the fact that I saw buy pressure resume above that trend line. So I already placed a buy stop order. I don't know if it's going to work out or not, but I'm only leveraging on some of the profit I had made so far in the last couple of weeks and see if it's going to work out. And if it doesn't work out, I get taken out. Well, and that's just some of the profit I have made giving back to the market. But if it works out, well, we shall be looking out for more opportunities to buy again if price action breaks out of that highest point at the $2,670.50 level. Now, if this does not work out, that this price does not continue to the upside and instead it breaks down this ascending trend line, and then we could see price drop to as far as the $2,632 area, so something around this area. So I was able to identify a zone between the $2,632 area and the $2,646 area. Now the question now is, how did I get to identify this area? Well, this area for me is a projection of where this current retracement phase might end. And if you use the Fibonacci retracement tool, run it through the previous impulse leg, I was able to mark out an area, my golden zone area, which is usually between the 50 and the 78.6% of the previous impulse leg. So that is why I have this area. So should price break down this ascending trend line, then we could be seeing price drop to between the 2,646 and the 2,682. So if you are a scalper or a short-term trader who loves taking counter trend opportunity, we could be seeing selling opportunities at the breakdown retest of that ascending trend line, which could dovetail to a minimum of 60 pips and maximum of about 890 pips if price action dropped to as far as the 2,682 level. So if we are going to be selling this one, I would want to see price break down the trend line, retest it into the structure, where we shall be looking out for buying opportunities to continue the uptrend move. So to give you a summary of what I'm looking at, like I told you earlier, I already have a buy position triggered around the 2,657. For those of you who are going to be part of the Go challenge, which is starting in about 15-20 minutes from now, you will be seeing I also have a scalping position around that particular area, which was triggered to as well. Now let's see how far that momentum is going to go. But if price action takes us out of that buy position and then breaks down the trend line, a retest of structure could incite a sell-off back into that zone between the 2,632 and the $2,646 area. So let's see how the market will play out. But trust me, I will be with you in the comment section of both my TradingView and Telegram platform to give us an update as at when due. So this is my simple view on the XAUUSD for today. So let's see how the market will play. Okay, I remember I have a structure on the 15 minutes time frame to make things a little bit more easier for short-term traders to navigate the structure. So right down into the 15 minutes time frame, this is what I came up with. So right on the 15 minutes time frame, look at what I have. I have a demand zone, a bullish platform, an area which has been known to be buyer's territory, as sellers have found it difficult to break through that area. So that's a 2,651 area. So as long as price sits above the structure, we shall maintain a bullish bias. Now, secondly, is this trend line I was able to identify here. Now, connecting the series of lower highs, we have this trend line. Can you see? We had price breakout of this trend line on last week Wednesday. Price broke out, retest, and right now look at what is happening. We have consolidation phase around this area. So in the last 4-5 hours or so, the market has been consolidating around this area, leading into a situation where this descending trend line has also been breached and broken to the upside, supporting a bullish idea for me. So this is what this made me join a bullish move, or let me say risk a buy position at this point in time. So I want to see how far this momentum is going to go. So we have the 2,656 area, looking out for more buying opportunities. And please remember that as soon as price moves significantly in our favor, we want to be moving our stop losses accordingly, secure your position at a worst case scenario break even, because we may likely see an extended sideways trading activity as major key players are expected to step aside, waiting for this economic data to come in before making any aggressive bet. So let's keep that in mind. Move your stop losses and be risk cautious as we take this trade around this uncharted territory. Now, talking about bearish ideas here, I will not consider selling unless the $2,651.50 level is broken to the downside. And look at what is going on here. If price goes below the $2,651.50 level, I want to consider that area as a seller's territory, because in the past, price sellers have found it difficult to break through, and if they finally break through that level, it could be a sign of strong selling pressure that may push price to the downside. And another thing about that level is the fact that if price drops below the $2,651.50 level, our price will also be below this descending trend line, further supporting bearish ideas at this point. So selling the XAUUSD today will only happen at the breakdown of the $2,651.50 level, and probably look at a minimum of about 70 to 80 pips to catch here, which falls at the second trend line we have here. And if price further breaks down that structure, well, we could be seeing more selling opportunities or selling ideas to capture on. But trust me, I will be with you in the comment section of both my TradingView and Telegram platforms to give us update as at when due. So this is my simple view on the XAUUSD for today. I hope I made myself very clear. But if you have questions or you need some further clarifications, feel free to let me know in the comment section. So in short, this structure we have here on the 15 minutes time frame will be playing a significant role in helping us guide our trading decisions today. So I encourage us all to mark it out on our chart, as they will be useful to navigate the structure. So I will take the next 10-15 seconds off, and do not forget to give the video a thumbs up. All right, guys, so I'm looking forward to seeing your questions, if there are any, before we start rounding off on today's session. All right, so I see a couple of statements here. Odueno, good morning to you. Glad to have you here with us. You're very much welcome. And I can see Oki Diana. Good morning, Diana. How are you doing today? Glad to have you around with us today too as well. She says here that when you say break the 5651, 5651, which one is 5651? Is it on gold? I'm not sure there's 5651 here, but let's go ahead with the question. Is it only candle close below or after break it and retest and going down? Okay, very good questions. Very good question there. Since you are new with us, you might not be familiar with our dynamics around breakouts of structures. So if you look at my indications here, you will see we have an arrow here which says breakout or retest of structure to capitalize on buying opportunities, and then breakdown retest of structure to capitalize on selling opportunities. So there are two ways to which we usually navigate this kind of scenarios. Now, first of all, for those of you who have been profitable with us, that is, you have been part of this profitable journey already, all you just need to do is place a buy stop order above that structure. So where every decision we make in the financial market is a risk. So it's not guaranteed that whatever decisions we made is going to hit our TP target. So that is why I usually mention that we have a well-defined risk management strategy in place, just in case that idea did not work out. So now, for those of us who have been profitable so far this week, part of this profitable journey, all we just need to do is place a buy stop order above that structure, and let's see if it's going to work out. If it doesn't work out, then we are only risking some of the profit we had made. However, if you are new with us and this is your first time taking on that position, all you need to do is exercise patience and wait for price to break out and then retest the structure before jumping into that position. So what you do is break out of structure, go down to your 5-10 minutes time frame, look out for price retesting the structure, giving us signs that sellers are finding it difficult to stay below the 2,656. Then you can feel comfortable joining an uptrend move. But for those of us who are profitable, we have something to leverage on. We have some profit we had made in the past, so you can easily place a buy stop order and then give enough breathing space for price action to move around. That means make sure your stop losses are wide enough to capture any form of volatility that could happen around this area. Now, in this case scenario, you want your stop loss to capture the previous low here. So we're talking about between 35 to 45 pips of stop loss, buying above the 2,656 level. I hope I made myself clear there. Diana, if I didn't, please let me know. Drop it in the comment section. I'll try to expatiate further. All right, so okay, 2561. All right, no problem. And Ismail Napari, good morning to you. All right, I'll take that as a compliment. Thank you very much for being part of the journey. And I think there are no other questions. Is Diana still around? If you still have any questions, please let me know in the comment section. So I think it's on this note we have come to the end of today's Forex Morning Mastery. It has been a wonderful moment with you guys. I really appreciate every single moment. I appreciate those who had clicked on that like button. Thank you very much for your support. I really do appreciate. You see, the like goes a long way in pushing the video to a wider audience of traders who may find this content beneficial. So if we can make the like tally with the number of people who participated during the live session, there is a high chance that YouTube will push that video due to the engagement it had to a wider audience of traders. And thank you very much for your support so far. I really do appreciate from the bottom of my heart. And today we were able to take on all of the assets we're monitoring since the beginning of the week, and we've done pretty well since the week started. We talked about the USOILSPOT, we talked about the GBPUSD, and of course my favorite, the XAUUSD, where we were able to identify simple trading setups that we are going to be using to navigate this market today. And please don't forget what I said about the expectations of extended sideways trading activities, as major key players may want to step aside waiting for this upcoming economic data to come in before making any aggressive bet. So what this means is that as soon as price moves significantly in our favor, move your stop loss to a worst case scenario break even, so that even if it snaps back, we will be taken out in a worst case scenario break even. And always remember that every decision we make in the financial market is more or less an educated guess until price action hits your TP target. So with this understanding in mind, let's ensure that we have a well-defined risk management strategy in place. And for those of you who joined us for the first time today, I do hope you are able to gain one or two things from what we discussed here today. And if you did, you want to be part of our subsequent editions. Trust me, the more time you spend with us in this community, the better you get to understand my analytical approach, which you can eventually use to refine your own trading strategies. So I look forward to seeing more of you same time on Friday, 8:30 a.m. UTC, 9:30 a.m. West African time, as we come here again to review how well these assets are doing and of course prepare ourselves for the last trading day of the week. And it's on this note I would like to wish us all the best of luck today. I see you, Oki Dwayana. All right, you are very much welcome. I'm glad it's clear enough, and I wish you best of luck today. So it's on this note I want to wish us all once again best of luck. Trade smart, trade consciously, and do have a wonderful evening, everyone. And for my go-go challengers, I will be seeing you in about 20 minutes from now. Let me take some breakfast and I will be right back on the go-go challenge. See you guys soon, and do have a wonderful evening, everyone. Bye-bye.